Good morning, good morning, good morning. Happy Tuesday. How's everybody doing? It is Tuesday, November the 19th, 2024. JTW here with another Xtrades FOMO live stream. I hope you guys have been enjoying these. We're going to keep on rolling with them. So if you guys haven't been tuning in this whole time, welcome, welcome. I'm glad you're here. You're going to, I hope, enjoy these sessions as we go over some trade reviews, some trade planning, talk about some general market analysis, and of course do my best to answer any questions that you all may have with regards to any of our existing trade plans, any of the trade plans that we work on together this morning, or if you just have trading general related questions. What's up, Strife? Good morning to you, sir. How are you? Hope you're doing well. All right, so with that being said, let's start to dig in here where we always like to start off with S&P futures, just giving us kind of a little bit of a read on, what should we be looking for as far as upside, downside in the markets. Generally speaking, for now, we've seen a little bit of a pullback here over the last few trading days. I'm sure everybody's well aware of that. We are catching pretty key support down here at 58.82. If you look back here, as far as just prior to the post-election run-up, we found a lot of resistance around this range. Really in this 58.82, I'd say it probably stretches as high up as about 58.93. In fact, let's go ahead and mark this down. I'm going to put a little placeholder line here. So anyway, in this little kind of tiny range, you could, I guess, potentially expand it out a little bit more. Bring it down to 58.70. I do see some support and resistance being built up kind of historically through this little range right here. So anyway, this is a key range for us to hold. I would say right now, I wouldn't really classify it as a supply or demand zone. And in this case, it would really be a demand zone. But it is a range of support and resistance that looks pretty significant to me. So I would say, let's kind of highlight it, keep it, in our back pocket as an area that we might want to pay attention to. So I'd say, we could be looking at potential buy the dip opportunities. I mean, if you're overall midterm, long-term bullish on the markets, I would say that this would be a good spot to look to enter versus, trying to enter up in here and trying to essentially figure out where this move is going to top out. Now that we've seen that move top out, we've seen a pullback, and we are finding some support in this key range. And again, you can kind of see how leading up to that move, that post-election move to the upside, that was pretty good resistance. You can also see some support and more resistance back there. And then same thing, both support and resistance along this lower line. It just looks like an interesting range of potential consolidation, but also a range within which, as long as we're holding that low end of it at 58.70, I would say looks pretty good for bounces to start to trigger off of this range. And then of course, if we get below, going up as high as 58.93, I would say would be a good range to watch for potential rejections and further downside momentum. So some other notable things about the ES chart that I'm seeing here on the 1 hour, and then we'll get to some, what's up, Cal? Good morning to you. Hope you're doing well. Then we'll get to some trade plan reviews and of course some new ticker requests. What's up, Ryan? Hope you're doing well. Yeah, NEO and NVIDIA have earnings tomorrow. I'm well aware of NVIDIA's earnings tomorrow. I was not aware of NEO, but that's good to know for sure. I'm still holding a handful of shares. I think I'm down to about a net cost of, I don't know, 450 or 430, somewhere probably in that range. I've been selling some call contracts against those shares. We said scoop them up around, what was it? I think 502 or something like that. And I've, like I said, sold some covered call contracts against that equity position to help lower my net cost per share, recoup some of that buying power, so I can then reapply it to adding additional shares of NEO or building my equity positions elsewhere. So yeah, that's a good one to know about, and obviously one that will influence kind of what contracts I'm going to sell or want to be short on, I should say, going into earnings. So with that being said, again, ES looking like it could consolidate a little bit here. We are seeing a breakdown below the 333 SMA. That 200 is starting to curl down. We are under bearish selling pressure right here, but we do have that kind of key buying pressure area, those kind of that section of support and resistance that I think is pretty significant. So, I'd say we could see consolidation between 59.58 and 58.70. So certainly you could play within that range, sell the rips, buy the dips at the top and the bottom of that range until we see a really good confirmed break one way or the other, in which case I do expect to see a fairly strong directional move once we get out of this consolidation phase. So these, consolidation moves do tend to lead to bigger follow-through moves whenever the direction kind of gets determined. So when we're in this sort of these doldrums of consolidation, again, short those rips at the top of the consolidation range, get into puts, sell call contracts, whatever you want to do. And then, of course, as we get to the bottom of that consolidation range, look to close those short positions and potentially flip to bullish, bounce positions until we break one way or the other directionally. All right, so with that being said, let's take a look at our member selected tickers from over the weekend. We did NVIDIA, which just got some good news with regards to, I think, the CHIPS Act over after close yesterday or overnight. I think there was some news about additional investments coming in for that. There's been some concerns about whether or not the CHIPS Act is in trouble with the incoming administration. I think that's probably more of a that's probably more FUD than anything else, for lack of a better way of saying it. And the reason why I say that is because ultimately the CHIPS Act is aimed at bringing chip manufacturing back into the U.S. more and more, and I think that's something that, regardless of your political leanings, I think everybody wants to see more semiconductors produced in the United States, so we don't wind up with a supply chain dependency, which was really exposed during COVID. So I'll be surprised if anything negative happens with the CHIPS Act. That being said, NVIDIA did have a big drop. It was pretty much a non-tradable move. I mean, the analysis played out below 141.67. We hit our downside targets. The problem is that all just happened during extended trading hours. So certainly if we're getting down to PT2 on a trade plan before the market even opens, we did this one, or I published this one, I should say, Sunday evening. As we're making those moves down, clearly you're not going to chase down here. I wouldn't begrudge somebody for looking at potentially shorting if we get a good back test of 141.67, which was our put entry. Let's take a look at this on a smaller time frame. I could certainly see that having been the case, and also a nice confluence there with Neptune selling pressure right around that same area. So certainly, going into the close there yesterday, I wouldn't have begrudged anybody from looking to go ahead and take some put contracts and potentially see if the analysis continues to play out to the downside. It actually did, at least down to PT1, and then a little bit further down to this 139.46 level before it bounced overnight. So a quick, entry and profit taking opportunity there. It's a little bit of reading between the lines and reading between the key levels that I published in the plan, but hopefully you all have heard me talk about this stuff frequently enough that you're starting to see this the same way that I would. Again, with that positive news overnight, seems like things are trying to roll back over to the bullish side. However, still below those SMAs. That 200's coming down overhead pretty quickly. Still overall, I think, in a bearish setup as long as we're below 143.33. So keep an eye on NVIDIA. This one looks like it could pull back further, but again, earnings tomorrow, I'm assuming after hours. Yeah, earnings tomorrow after hours. So keep that in mind. We certainly could see an ER run up. Generally speaking, I would say NVIDIA's probably expected to beat expectations, but that kind of raises the bar, doesn't it? So if they don't beat significantly, we could still see a pullback even if the earnings report is overall positive. Cal, can you please do Tesla? Yeah, sure. We could take a look at Tesla before all is said and done this morning. All right, let's take a look at Meta. This was also member selected trade plans. We did finally get a good breakout above and kind of an interesting little, it's almost like a fake flip right there. Honestly, it was just barely enough. And this is something that I'm working on weeding out on my Neptune indicator. I think this bear flag should still be probably in place. That was not a very convincing break, but again, writing logic for these scripts is not always the easiest to try to account for every situation like this. So overall, I think this still looks pretty bearish to me, even though we did just barely get that flip over. I also was shooting maybe one level too far on that first price target, 560.69 versus 559.89. Clearly, that was the more key of those two levels. Yeah, I am a bit surprised we didn't get at least all the way to PT1 there. So overall, though, Meta looking, I don't know, looking pretty mixed at the moment, to be perfectly honest with you. I would say I'd still be leaning a little bit bearish, kind of picturing this bear flag still in place. So keep an eye on it for a break below 549.21. I think that definitely will bring further downside. SMAs are bearish here on the 15-minute. Let's just take a look at the hourly real quick. Hourly's pretty bearish across the board. We are a little bit overextended to the downside, so may see some consolidation first. But overall, Meta kind of looking iffy to bearish at best to me. So, keep that in mind as we move forward with our Meta trade plan. AMD, let's take a look at this one. Broke out to the upside yesterday. We'll go on a slightly smaller time frame. Yeah, I caught that 333 SMA there yesterday. This is one that I talk about a lot with you folks. So, please make sure that you're watching the 333 and the 200 SMAs. I don't care what time frame you're looking at. Generally speaking, if they are coming into play with the price action, they're going to be kind of dynamic support and resistance levels that you're going to want to keep on watch. Just in my personal experience, that's always been the case, which is why I kind of include them in the defaults for Neptune. For those of you who are paying Xtrades members, don't forget, I know it's been probably quite some time since I mentioned this, but I do offer my ultimate moving averages indicator for access, totally free of charge. If you're a paying Xtrades member, you can use that to put pretty much any, up to, what is it, 6 or 8, I think, moving averages on your chart with just one indicator slot. But obviously there are plenty of SMA indicators out there that'll let you put multiple SMAs on your chart. So even if you're not going, the full, buy-in with Neptune, at least get that ultimate moving averages indicator. It's, again, free of charge if you're a paying Xtrades member, or just go get a, simple SMA, simple moving averages indicator, put the 200 and the 333 on your chart, watch how they work, and tell me, if you find that they are not useful. For some reason you see that's the case. I would love to kind of find out what you're looking at and why you think that. But generally speaking, these are very, very good moving averages to watch, especially that 333. And there we go with that rejection right there. So that's what kept us from, I think, getting the full move up to PT1 there, which is why these moving averages are important to look at. Again, when I'm doing this plan, things are in a very different spot than when, the price action is actually playing out. So these are things that you need to understand and be able to make decisions on in the moment versus, I guess, being 100% dependent on just the horizontal levels alone. That would have definitely been an opportunity to take profit. And at the very least, you should be moving your stops up. So this hasn't stopped out yet. Overall, still looks pretty bullish to me. It just needs to get through that 333 SMA here on the 15-minute. And I think a lot more room opens up for AMD. So overall, AMD, I would say I'd be leaning a little bit more toward buying the dip here, as long as it's holding over 136.08. Occidental Petroleum, we did this one on last Thursday's live stream. This one opened up right up against our stop loss, average down for both plans, broke to the downside, came back up, back tested. What do we got there? Both the 200 and the 333 SMA. That's where that resistance came back in and ultimately pushed it down for a PT1 plus the following day. Trying to push back over, is flipping some things bullish and now bouncing off of that SMA combo versus rejecting it. So some things looking fairly positive, I would say, for Occidental Petroleum here. I would say at the very least, I'd want to see it break back over that yesterday high a day. I think if it does that, we could potentially see a test of 52.05. And I would also not begrudge somebody from using a 50-50 or 50-51 stop loss. So 50-51 stop loss, 51.26. If we break above that entry, with a target at 52.05. That gives you a little bit of a better than 1-to-1 risk reward ratio there. So that's Oxy. And then last but not least, IWM. This one is breaking down and breaking down. We did this plan Thursday morning during the live stream. We saw it. Let's go ahead and go to the 15 minutes. So we can kind of get a better perspective on things here as far as when we actually got our breakdowns and all that stuff. So we did this one Thursday. It was essentially a no trade, was holding that support Thursday going into the close. Then Friday morning broke down, took it all the way to PT1 before it bounced. I mean, that was a really directional, almost straight down move. Did catch a little bit of support there at that previous all-time high at 228.63, but ultimately did catch the PT1 there at 227.82. In fact, I think that was pretty much, I mean, it was within pennies of being the low of the day there. So PT1, highly accurate there. That's what we strive for when we do these trade plans. Then we got a little bit of back test of the selling pressure here on Neptune. That's a great opportunity to reload any puts that you sold here, reload those puts here, and now we see a breakdown below, and now we're back testing PT1 as resistance, looking like it wants to push down further for PT2, or at the very least a retest of this pre-market low here this morning. So go ahead and scale some more out for profit if you're still riding IWM puts from last Thursday's live stream. All right, let's get to some new trade plans here. We've got Tesla and NEM from both Cal and Navy Plum. So let's start with Tesla. We'll get to them both. We got plenty of time. All right, Tesla. Looks like it's running through an old trade plan. Can't be that old. I guess maybe I hit or deleted the long short. Yeah, I just deleted them for some reason. Oh, you know what? We probably pulled this one over onto the recap chart, didn't we? Let me go to that real quick. Just see if that's where my long short tools are. The drawings. Yeah, there they are. Okay, so when did we do this plan? We did it on the Tuesday, November 12th, so literally a week ago today. We did this Tesla plan, played out almost to PT1 before it bounced. That's interesting. All right, let's go back to the main Tesla chart. I just wanted to kind of get a sense of when we did this last plan, because I could see the levels kind of set up for it. Yeah, that bounce came a little bit before any levels I have on my chart, actually. So that'll be something to pay attention to as we try to revisit a plan on Tesla here. 273 and both those, and this was the key level. Clean up this chart real quick. Actually, I'm going to do it this way. Be much faster. All right. So, what do we want to do with Tesla here? Look at this on the hourly real quick. I'm imagining this is, yeah, still pretty bullish. Still a little bit overextended from those moving averages. Still not seeing why we bounced a little prematurely there. That's interesting. I know I keep saying that, but it's because it's true. Do have a level of interest right in here. It's actually a pretty good one. I want to be a little bit conscientious of potentially getting into a trade too early or getting sucked into a trade that's not got more room to continue higher. But this level does look like a pretty significant level of interest to me for upside. I wonder, do I have this I could go either way on this one. 328.61 or like 330.20. Let's zoom in on this a little bit. I think there's just I'll take a longer look at this outside of this live stream. Try to figure out if this is just one level or if we just have two that are kind of really tightly packed against each other. But I think that 329.97 makes for a good stop loss average. Now, what's up, Chris? What's up, H Bach? We've got NEM and Tesla so far for our ticker requests. We're doing Tesla at the moment, going with a potentially aggressive entry here at 339.88. Looking like 349.04 could be a good first price target. My only concern there is, are we putting too tight a risk reward on that? Let's see. This is something you always want to check. Make sure that you're not putting yourself in an upside down risk reward setup. 0.91, I don't love that. So then my question becomes, is there a more logical stop loss average down on this? Tesla's been really volatile though, so I do want to give it plenty of room. All right, let me think about this for a sec. Apologies, I'm just trying to figure out. You know what? We're going to switch this up. I think there is an opportunity over 339.88, but I think, again, it puts us kind of in a precarious spot. We set that as our entry. However, if we make this one slight adjustment where I was looking at a potential PT1, we look at that as the call entry, look at what I was looking at for PT2 as our PT1, and then move our previous call entry to being our stop loss average down. Now all of a sudden we've got a 1.25 risk reward versus being slightly upside down. So that's where, again, we need to look at these charts. We need to be willing to make adjustments and make sure that we're putting ourselves in position where continuation in our favor is statistically a more likely scenario than what would happen in a stop loss scenario. At least I hope I said that the way I envision saying that in my head. All right, so let's kind of keep on actually with this upside trade plan. Is that 359.93? That's probably the 52-week high, isn't it? Yeah, pretty much. So over that, we're gonna have to go into the Wayback Machine. Let's see where that takes us, back to 2022. And even back then, but we did just test that 359.93, so I'm going to leave that in place. Question is, can we go back to January? Let's go with January 4th of 2022, at least on the 4-hour chart. That's what I want to see. Whoops. Okay, it'll let us get there. So yeah, I like this. It's a second price target. Third, oh shit, I didn't need to do that. I want to see this second move through this range here. Yep, that's about what I expected to see. Third price target up here at 383.75. I like where PT1 and 2 are at. That looks solid for our upside plan. All right, so downside. Kind of liking this. We fill this, which we already have, but if we can continue back through this previous gap level, let's see what that looks like. Yeah, I really do like that, actually. That's not going to be a stop loss. Average down. We will set it at this gap. There's a weekly level just above. Or is that weekly level a little bit off? It should be a little bit lower. I could certainly see that being the case. Yeah, that actually looks pretty good. So, switch that up. Stop loss average down there. PT1 could be 313.04 or 308.07. I could see either of those playing out. Let's see. I think it puts us right at about a 1-to-1 risk reward. Slightly better than 1-to-1, actually. When in doubt, I'm going to shoot a little bit more conservative. Again, it could be 308.07 first price target, but I'm going to go ahead and say this weekly level here at 313.04. PT1 for the downside. PT2, I know we bounced a little bit shy of this, but it's already eyeballing this 299.46 level. Down to 289.14 is what it looks like to me. For your downside price targets, see how this looks if we stretch this chart out. Does it become, it's still pretty readable. I don't think we need to move that over to the recap layout, and that kind of helps me keep track of it. Okay, cool. I like this, where we got it. So let's go. Here is your Tesla live stream plans. Get this posted all over the place real quick. So what are we looking at for Tesla? We are looking for a break above 349.04. That should give us a first price target at 359.93, second price target 370.24, third price target 383.75. Those are our upside price targets with a stop loss average down at 339.88. To the downside, we're looking for a break below 324.75. That should give us price targets at 313.04 first target, 299.46 second target, 289.14 third target with a stop loss average down at 335.26. Those are your Tesla trade plans. Upside, downside, whichever way it goes, you'll be ready. All right, Newmont Corporation. This one's a new one. I've not heard of Newmont before. Navy Plum. I appreciate you coming up with one that even an old head like me doesn't know about. Pretty good volume. A ways out until their next earnings report. Of course, Cal, you're very welcome. Hopefully everybody profits from that Tesla trade plan. Very interesting. Again, we talk about this 200, 333 a lot. You might be sick of hearing about it. Man, this one's really been getting its teeth kicked in since that earnings report. Coming up and back testing as resistance, that 200 SMA. That's a pretty interesting resistance point. Definitely looks like it could make a move higher, though, if it can break over this 43.76 level. Gold miners. Okay, very cool. The ticker symbol sounded familiar, but I didn't know the company name off the top of my head. And I don't get into the precious metals trades all that often, but it's not a bad idea at all. I like where you're going with this. All right, so just gonna real quick hide my indicators. Let's take a look at this. What's up, Chris? Good to see you in both chats, both channels, my friend. Hope you've been doing well. Hope you had a good weekend. All right, so what levels are we going to want to watch here? this is a little bit lower. Yeah, right about there. Feels like you're missing a doctor appointment. Trade plan a day will keep bankruptcy away. That's gonna be my new slogan. Trade plan trade plan a day keeps a blown account away. Yeah, no, yeah, I hopefully people are, walking away from these feeling like they did get a little bit of like a, sanity check, trading psychology check, trade strategy checkup. I want people to walk away from these live streams feeling like they learned something, feeling like they've got an actionable way to profit from the moves that the market decides to make. And what they have is something that I think is generally pretty methodical and fairly consistent on the results. At least as consistent as you could really ask for in the world of trading. So I like it. Yeah, I've been saying it for a long time, for at least a few years now. I would much rather focus on providing trade plans and giving people a very clear, you don't like, it's very easy to miss an alert, right? Whether it's an alert to get, in fact, I had somebody who I know follows a lot of what I do pretty consistently, asking about one of the wheel trades and saying like, are we still holding these? I want to say it was probably ASTS. They were asking, are we still holding the 30, do we still have the short $30 call contracts? And the answer was no. In fact, we had already bought those back and booked some premiums there, and had also gone ahead and sold the 35 calls for December. But again, this is somebody who follows me pretty regularly, totally missed it, right? Now, a little bit different with wheel trades, at least as far as how I approach them. They're somewhat based on support and resistance and somewhat based on a plan to try to maximize premium collection, but it's also a little bit of just a raw numbers game, or can be played as a raw numbers game, I should say. So there's not always a clear plan that I can kind of put out in advance with those, right? But if we're talking about just getting into a straight up options trade, it takes all the guesswork out of it. Nobody has to, people don't have to constantly check in. Hey, are we still holding this? Do we close this? What should happen? You've got all the information on the chart, all the levels to watch, no guesswork. Should really up the confidence level in what you're doing with the trade versus kind of sitting there wondering if and when, the person whose trade you're following is going to provide you with an update, or did you miss the update, right? It just takes all of that anxiety and uncertainty out of the equation. So that's my soapbox on plans versus alerts. Nothing wrong with alerts, and I try to alert trades as often as possible. But a lot of times I'm just, I'm following the plans, right? You guys got the same plan that I've got. I don't follow them all. I follow as many as I can. There are plenty that I miss for one reason or another, or I hesitate on, like that Boeing setup that we saw for the downside. I really was annoyed with myself for, I saw it. It was right there. I was kind of already in a bunch of trades. I didn't feel the need to be in another one. And for the plan, the entry that I saw was a good setup, but it wasn't necessarily strictly following the plan. It was much earlier. It was up kind of in the call ranges of the plan, but the levels and the indicator setup was there that I would trade 9 times out of 10. That was the 1 time out of 10 that I chose not to trade it, and Boeing just absolutely melted down from that rejection point. So yeah, I missed it. I missed that one. So it happens. I'm not, I don't need to trade everything though. I'm perfectly fine missing a few trade plans as long as overall I'm ending my days green and ending my weeks green. That's really all anybody should care about, right? Don't expect to find every plan and hit every trade perfectly. Whoops, what the hell did I just do there? I think that's an unrealistic expectation, and kind of sets you up for psychological trouble, potentially failure. If you're trying to hey, how do I trade every single ticker that's made a decent move every single day? Like, you're not going to do that, right? Just focus on, quality setups, focus on good position sizing, focus on consistency, bigger picture, right? When in doubt, zoom out. And that's true with your account as well, right? Like, if you've had a rough trading day or a rough trading week, zoom out. If it's been a rough trading day, see how you're doing on the week as a whole. If it's been a rough trading week, zoom out, see how you're doing on the month as a whole. The goal is, red days are okay, but we want to avoid red weeks. If you avoid red weeks, well, then you avoid red months, and so on and so forth. But again, red weeks should be obviously avoided. Not the end of the world if you do wind up having a red week. Everybody goes through that too. As long as you're ending the month in the green, that's what really counts, and where you really need to keep your focus. So anyway, just try to kind of put people in the right mindset. I guess psychologically, it's one of those things that is just really hard to it certainly doesn't translate well if I was just to type all that out, right? You could read it. Does it sink in as much? I don't know. But then on top of that, the psychology of this, like, it's more most effective. This is what I'm trying to say. I can get my words out. It's most effective if I can sit down and work with somebody one-on-one and say, okay, let's talk about your specific issues, right? Like, what do you really struggle with your trading psychology? But at the same time, it's like, it's not something that you could just boil down to being an exact science. Everybody's, it's a very nuanced part of trading. But if you can kind of develop the right mindsets, right, and the right sort of mental systems for, being prepared and kind of thinking about this as, think a bit about it as a job, right? And you're not going to have great days at your job every day. You're not gonna have great weeks at your job every week, right? But overall, if you're successful in your role and you bring value to the table and in the world of trading, if you're closing your months profitably, most importantly, you almost can't lose, right? If your months you can't lose. If you're closing green months, you're literally making money, but losses are going to happen. And I think that's the big problem with a lot of people, or with a lot of younger traders' mentality when it comes to trading, is they expect perfection from themselves, and they expect to to catch every trade that had a massive move, and they get hardcore FOMO when they don't. And that is a recipe for a blown account and getting stuck in a quagmire of just compounding losses. So accept the fact that you're gonna take losses, you're gonna have red days, you're gonna have red weeks. Again, try to avoid the red weeks, but if it happens, it happens. Try to minimize the damage if you can. Sometimes that's a win. Penny saved is a penny earned, all that kind of stuff. But yeah, accept that losses are a part of the game. The sooner you accept that, the quicker you'll become profitable, I think. But a lot of that, yeah, thank you, Chris. And a lot of that has to do with risk reward setup, right? If you're setting your risk reward up like we do with these trade plans, so you can take some of this to a technical place, 1.26 to 1. Okay, well, if I stick to that strategy, If I wind up, being a 50-50 trader, for every one win, I've got a loss, but I'm at least getting that 1.25 return versus a 1 loss when I do take a loss. Overall, I'm profitable, right? I would like to be more profitable and more quickly profitable. But that takes time and learning, and again, kind of making small tweaks to your system and your strategy. Once you've kind of got it to that point of being like you're a 50-50 trader, from that point forward, focus on small and minor adjustments, right? If your success rate is 50-50 and you're overall profitable, from that point forward, just make small adjustments. Don't try to totally reinvent the wheel. Don't say, okay, now I'm gonna like bring in MACD and all this other stuff that I've not looked at this entire time and try to start using it. Like that's just gonna mess you up, right? And it's gonna mess you up in the pursuit of the unattainable, which is perfection. So anyway, yeah, I feel like that was a long soapbox. Man, hopefully in all of that rambling, some of that made some sense and was valuable to folks. I'll go back and rewatch this stream and see if I made any good points or not. All right, so as I was going through all of that trade psychology deep dive unintentionally, I guess a little bit, we were finishing up this NEM trade plan, Newmont Corporation, gold miner, so smart play here, precious metals from Navy Plum, always kind of with his head on a swivel, been around watching these live streams for, gosh, I want to say like one of the OGs, probably remembers the days of when I used to do this with Guru. I think Navy Plum was around for the original, like the very first FOMO live streams. So anyway, with that being said, let's go over this Newmont Corporation live stream plan that we did for Navy Plum. So what are we looking at here? We're looking for a break above 43.81 on Newmont to play for upside. That should give us targets at 45.20, 46.14, and 47.54, with a stop loss average down at 42.75. To the downside, we're looking for a break below 41.92 to play short or play puts, with targets at 40.87, 40.24, and 39.23, with a stop loss average down, shared with the upside plan at 42.75. Yeah. Back in the day, I was kind of I was Guru's wingman. He kind of led the stream in that regard, but yeah, I obviously when he, it was fun. I think we had some really good back and forth and some good conversations there, for sure. And we both got to kind of give our perspective on things. I wish he would have been a little, I love Guru. In fact, I need to reach out to him. I've still got his contact info. I haven't talked to him in a while. We used to stay in touch for a while after he left Xtrades, but, the one thing I wish he would have been willing to focus a little bit more on was like digging into the hard technicals of some of this stuff the way that we do on these live streams. And that's obviously an adjustment I've made with me kind of running the show. But yeah, gosh, I don't know how many, that's probably been 2.5, 3 years ago. But they were good streams. I really enjoyed getting to at least every other day, trading day wise, getting to sit down and kind of just get ourselves in the group and the community kind of set up. And, just these like check-ins, right? Kind of think about it as like plugging in your Tesla, right? Coming to these live streams is just recharging your battery and getting ready for the next long haul down the road until it's time to recharge again. So with that being said, hopefully you guys feel fully psychologically fixed after that little tangent I went on with regards to trade psychology, but I think it was a good way to fill the void of silence while I was working on that live stream, or while I was working on the live stream plan for Newmont, and hopefully it puts y'all in the right headspace, right? That's the goal. Anytime I get into that stuff is just sometimes you just need a little bit of like a mental gut check every once in a while. So hopefully that's what you got from that part of it today, but we are getting close to market open. I do need to go get the SPY plan put together and posted in the options watch list. So I hope you guys go forth, crush it with our Tesla and Newmont trade plans. We will be back Thursday morning at 8:30 a.m. Eastern Standard Time. So with that, I want to thank you all so much for joining me here this morning. I hope you'll come back on Thursday. I hope you'll tell your friends. Let's get this audience up. Let's get it popping. As we always say here on the FOMO live streams, plan your trades, trade your plans. I guess we need to add a trade plan a day, keeps a blown account away. And of course, keep your wins big, keep your losses small. Thank you guys again. I really appreciate it. I hope you guys will come back Thursday. Until then, I will see you all in the chats, and I hope you have a fantastic day. Take care. Talk to you soon.